So I guess at the end of the day, 2025 is, I'm just going to say it now, it's the year of the investor.
Love it.
Right? The people that do the work, disciplined, disrespectful, follow up, follow up, follow up, follow up. Because transactions are going to be low. We're going to have more and more motivated sellers, and people a part of one rental at a time are going to clean up. Right? It's that's what 2025 is going to be. It's just, I can't see it any other way. Alrighty, folks. I do not mean to sound like a broken record, but sometimes I am. Rates are up. Rates are up again. We've talked about DSCR world changing, right? We've seen a big buyer stay on the sidelines. We're starting to see the smaller fish change guidelines, add more rules. Folks, cost of capital is going to be higher in 2025. Now, you can look at that as a problem or an opportunity. It depends on how you want to look at that. Well, we're going to talk with Dustin from Convoy Home Loans. Dude, this 10-year, it's ripping, right? It's up over 4.6. Seems like it wants to go to 4.7, possibly even 5%, Dustin. That'll do something to mortgages.
Yeah, no, ripping would be an understatement. I mean, the fact that we're even saying 4.6 when, 3 weeks ago, 4 weeks ago, we were hovering four, sub four, right?
Yeah.
It's a scary train ride, right, that we're on, that I'm not sure we know when the peak is truly going to be, but for now we're still kind of climbing up that ladder. And we say it all the time, but if you like it, lock it, and you should have been doing that. If you haven't, I
Yeah.
would still do it today.
Yeah. Yeah, it's pretty wild. And I'm glad we have receipts. We can go back weeks, months, and even quarters. If you like it, lock it. There's a lot of people that have been hoping, praying that rates would come in, and they're just not. I cannot fathom a lens where rates are in the sixes, low sixes, for at least the next 6 months. It gets a little cloudier after that, but we got a new administration. We've got deregulation. We have the tariffs. We have this. We have tax cuts. We have all these things. All of those potentially inflationary. And if you guys don't remember what happens if inflation goes up, rates go up. That's just where we are for the next 6 months, I think.
No, and I think you nailed it right on the head. And we got receipts, like you said, from 2 months ago and a month and a half ago about, everything being more inflationary this go around for Trump's second run. And ultimately everything on the, we'll call it Fed calendar, market calendar, that a lot of enthusiasts for lower rates look at, coming up, what could possibly drop rates or lower rates. There is none. There's only slow ticking, increasing actions that are going to make rates go up. And like you touched on with inflation, but also put this into perspective, like we spoke about, continuous jobless claims, right? Those are staying longer. Those have been the highest they've been in 3 years. That's not helping. Sure, the amount of new applications are reducing, but that doesn't tell you the full story when you look at the continuing claims and how long it's taking people to actually get a job, right? And that's part of the problem as well.
Yeah. One of the things that I brought up, I think it's 8 or 9 weeks ago, or yeah, 8 or 9 weeks ago, was my PTSD from 1981. And that era was when my father was unemployed for 9 months of the year. It was just a horrific time for our family. And I guess my big fear for 2025 is the unemployment rate goes up, but stays right around 5%. But it's that duration, right? To your earlier point, we just hit 1.9 and change. We could be at 3 million. 3.2, 3.5 million. We could really see duration become a problem. And, the outcome of that might be stagflation, right? Where
Yeah.
we have inflation and low growth. And
Yeah.
the Fed is just effed. The Fed is effed if we have stagflation.
Yeah, and we obviously don't want to see that. High inflation and high unemployment will tell you everything you need to know, that that's not the two sides of the coin that you want to be on, especially going into something that you're anticipating or hoping for a better market, a better, rate environment specifically for this, podcast, or when I'm on this show.
Yeah.
But hopefully, the moral of the story for your followers and your investors is, this is when you want to buy, right? This is
Yeah.
when you want to take action. There's going to be a lot less competition. You're going to be able to write disrespectful offers. You're going to be able to be, in negotiations with sellers that need to sell, and you're not waiting in a line to get into the open house with 100 other people trying to pay 10, 15% over top
Yeah.
dollar.
Signing the firstborn's name to
Yeah.
the old seller, making all kinds of promises. Yeah, it's going to be really interesting. Again, folks, I don't know how else to say it. 2025 is going to suck for a lot of people, but not us. One rental at a time. We do the work, disrespectful offers, track the market, buy box, daily discipline. We are going to probably do some of the best deals we've done in the last decade in 2025. Just believe that, do the work, write the offers, don't bet on appreciation, don't get variable rate debt, make sure cash flows, all the stuff we talk about. Just believe in yourself and do the work. And I think 2025 is going to be a lot of fun.
I
Let's
love it.
switch to Plan B. You brought to the channel the largest buyer of DSCR loans decided to take a hiatus about 2 weeks ago. I pontificated in that session that if the big boys out, the little guys are going to start changing their requirements, and it sounds like that's already happened in 2 short weeks.
Yeah, how about that? You nailed it right on the head, and I can get into more of the specifics in a couple of minutes. But basically, what Mike just said is when you see one of the biggest players, for example, we can just put, for a easy metaphor, if you see Apple all of a sudden decide to cut one of its go-to, consumer products for X, Y reason, maybe it's health reasons or what have you. All of the smaller ones, right, could be. Fine, I shouldn't say they're smaller, but Android or Motorola or et
Yeah.
cetera, Google, they're going to do the same thing, right? But maybe on a smaller issue. And that's exactly what we're seeing with the hedge funds right now on Wall Street. Basically, on average, I don't know what the exact number is, but on average, I'd say we get one kind of bullet point, okay, changed in the guidelines that these hedge funds require us have on all loans, probably once a quarter, right? It could be a small change saying, hey, we won't go up to 75% on a 4 unit cash out anymore. Now it's 70. That's
Right.
kind of a big change, but that's once every quarter. In the last 2 or 3 weeks, we've had about 4 little iterations of these bullet points that they make us require to have on a loan if they want us to be able
Mm.
to sell it to them.
This is coming, folks. I'm telling you, the DSCR landscape, we got a little fat, dumb, and happy. DSCR lenders got a little aggressive, a little over the skis. They're seeing losses. And that means DSCR loans are going to be more expensive. They're going to be less leverage. And they're going to, frankly, be more painful to get done. And, folks, they might have personal guarantees. That'll be fun.
Yeah, you nailed it right again. Yes, we did speak about it. But for example, one of the bullet points, okay, so for the past 2 years, this has been pretty common where you could essentially get, let's just say an LLC with 10 of you, right?
Yep.
But one guy or one girl has 20% or more ownership. The fund or the lender would be okay with saying, all right, the person that has 20% or more, can you do a PG? And we won't look at the other, 9 members, right? Now that's gone. They're going to want a total of 50% or more. Okay.
Oh, wow.
So you might have to be like, all right, now I got to get 7 people to sign a PG. And believe it or not, I've been there, I've had clients there. You've probably been there. It's a lot harder to get 7 people to sign a PG
Oh, yeah.
when is, a
Yeah.
month, 3 weeks ago, I only needed one guy. Just get somebody up to 20 and the
Yeah.
other
This
people we
is,
won't care about. Like
oh,
that's a big change that
it
people
is.
don't
It's a
realize.
huge change.
Yeah,
Yeah. Personal guarantees changes the entire conversation. It could change the
100%.
equity structure. It could change people who want to be a part of it. Yeah, folks, conventional loans more expensive, get ready for sevens, but I think certainly the first half of 2025 people are going to be shocked at the changes, the cost, the rate, the leverage, and the little ticks and ties to get DSCR loans done. It's going to be a different world in 25, I think.
No, and it's something that, we've been uh, on the forefront, we'll say, for DSCR loans. We've written a lot of DSCR loans,
Yeah.
and we're always kind of getting, here and there asked, hey, can you go up to 85? I see this other shop doing this, like 85% loan to value. Can you do this rural area at 70K, right? And there's a lot of other loan DSCR writers that I firmly believe like that's asking for it. That's
Oh,
asking
yeah.
for it in a year from now. That's asking for it in 3 years from now when you get no payment made for 6 months or the property's underwater or the short-term rental can't cover for 4 months. Now the operator is stuck with, a $5,000 payment that he can't cover. Things like that. And I think in 2025, and John has said it, I know a couple times in the last two videos, like, knock on wood, I don't want DSCR loans to go anywhere, but it is not a guarantee that DSCR
No.
loans will be here forever. So you need to take that not with a grain of salt, but with as much, as I can tell you over the interwebs right now, that DSCRs may not be here. I'm going to push as much as I can, but I'm pushing in the right way that, look, I want them all to be at a minimum 1-1 or 1-2 DSCR. I want them all in long-term rentals. I want them all in, markets that, no offense, I don't love rural markets for
Right.
DSCR loans. It's always a short-term rental play that you got there. And I
Yeah.
want them on 1 to 4 units, nothing with the mixed use, the where, none of that stuff, right? Those pencil out, those work, and those are great.
Yeah. Yeah. Again, folks, I think 2025 is going to be the year, if DSCR loans, I don't know, if they were on a scale of 1 to 10 of availability and difficulty of getting, in 24, if they were a 2, right? 2 being relatively easy, they could easily be a 6 or a 7 in 2025. And I don't think people are ready for it. I think there's a lot of people who are in the business or real estate investors in the transaction business that depend on DSCR loans. And you guys, you might need to create some plan Bs.
100%. And it goes into just like, I'll leave the last point. So one other bullet point is like the smaller collateral hedge funds are just starting to kind of push away. I've seen
Define
them move
smaller.
from,
Define smaller.
so 6 months ago, we were kind of hovering the 100K minimum loan amount. Then
Okay.
about 3 months ago, it went to 125. Now we're at 150. That's
Mm,
slowly creeping up. I don't know if it goes back down, but there have been a lot more, let's just say, post-closing negative payments, not making payments on the smaller loan amounts for whatever reason. I'm not
interesting.
trying to insinuate anything, but what I really want to see get rid of that I will feel much better about are these no ratio DSCR loans.
Mm,
Now, some of our funds still offer them, but get this little bullet point. Some of them didn't care if it was zero point 0.3 debt coverage, right? Meaning you're collecting 300 in rent and the mortgage payment's 1,000, right?
right.
That's 0.3. They don't care. Now take the higher rate and figure it out and even have a harder problem, right? Now we're seeing minimums at 0.75. Okay.
Ah,
I want it to be one,
yeah, it's got to
1.0.
be one. I agree
Get
with you.
rid of why if
Why
you're
are we
not
doing this?
providing any personal income, right? If you're not providing any sort of tax returns and we're only looking at the property, how does it make sense to write a loan where, well, shoot, you can't afford it, so I'm still going to give it to you,
Yeah,
right? That's
we
what a
call
no
those
ratio is.
alligators here, Dustin.
It's an
Those are
alligator
alligators.
loan. That's what we should rename the convoy no ratio, convoy alligator, don't do it
Don't do it.
type
Make it
deals.
painful. Yeah, make big old
Yeah,
logo of an alligator eating a bag of money.
yeah,
It's the only picture in my first book. It's
yeah.
painful. Don't do it. So I guess at the end of the day, 2025 is, I'm just going to say it now, it's the year of the investor,
Love it.
right? The people that do the work, disciplined, disrespectful, follow up, follow up, follow up, follow up. Because transactions are going to be low. We're going to have more and more motivated sellers, and people a part of one rental at a time are going to clean up, right? That's what 2025 is going to be. It's just, I can't see it any other way.
No, and we've been through this what for 3.5 years now, so it's nothing new. It's putting in the extra work that you should want to do, honestly, if you're an investor, right? You don't want it to be easy.
Mhm.
And like you said, I personally, and this is not towards any of the first time home buyers trying to, break in and buy their home or trying to make the next step up, but personally, if you're an investor, you want it to stay like this as long as
Yeah,
possible,
exactly.
right? That's
Buyer's
that's
market,
the thing.
baby. Buyer's
Yeah.
market. Absolutely. Well, if somebody wanted to reach out to Convoy Home Loans and work with yourself or your partner, what are we doing?
Well, you normally have that little ticker thing or whatever it's called. So there we go. I can do like that
Yeah.
maybe, or it's
Yeah.
that
Yeah.
way.
That
Go
way.
to
Yeah.
convoyhomeloans.com. Make sure you click the drop down menu and say that you came from ORaaT, because we did find out that there was one of you that slipped through the cracks last month and got to work with one of our associates who I think did a great job if you're listening.
Yeah. No, again, if you click the drop down list, you get Dustin or his partner, Jonathan. If you don't pick it, you'll still get great service. You just won't get the guys at the top. And
Exactly.
come on, let's work with the guys at the top. You're amazing, man. Happy New Year. Merry Christmas.
You too, buddy. Thank you.
Uh-huh.